is Groupon now?
Well, Groupon is now mostly actually a goods site. I believe that more than 60% of the revenue just comes from selling merchandise off its website, the other 40% being the local deals site that we know that it was originally. And it's the goods side that's doing very well, that reported a very good result last week. But I'd say the more interesting part, especially to Alibaba, is probably still the local deals site.
Now, Alibaba did send us a statement saying, we bought a very small minority stake in Groupon in order to share ideas between U.S. and China markets in a space, online to offline, that we have experience in China. This is a passive holding, and if Groupon management would like to exchange experiences with us, we are prepared to share. So then my next question, Gil, is what in the world can Alibaba do for Groupon that justifies a huge stock jump like this?
Well, it's really what Groupon can do for Alibaba. If you think about Alibaba, there's a strategic and a tactical imperative. Remember, Alibaba is a company that thinks in decades. Jack Ma famously said that the company that was founded in '99, he wants them to be around for 3 centuries. And that's how he plans. Among many things that he's taken away from Jeff Bezos is this notion of having a long planning horizon is a competitive advantage in itself. And that's how he sees the entry into the U.S. market as a long-term imperative. And what he's doing now is planting seeds. Jet.com, Boxed, Lyft, Snapchat. These are seeds that he's planted in order to learn about the U.S. market, see what it's about, so when the invasion is ready, when the full entry into the U.S. market is ready, they will be prepared. The tactical side is that they're also somewhat managed like a hedge fund. They took a look at Zulily and invested after it was down 80%. They knew there was value there, which was later realized by QVC because they're in the market. And it's similar with Groupon. They saw it down tremendously. They realized there's still value in that O2O market that they talk about. And they invested at a weak point when the stock was depressed. So there's both aspects. There's the long-term strategic aspect, but there's also this tactical hedge fund aspect when you look at what Alibaba is doing.
David, you're nodding.
Yeah, well, I would completely agree with that they're kind of like a really well-informed, tech-savvy portfolio investor that basically, you know, these deal companies are very common in China. They've observed them. I'm sure they have tons of investments in a variety of them. And they saw that Groupon was really cheap by their analysis. And, you know, you had the CEO on, Betty Lou was interviewing him on Friday, and he said they have $850 million in cash. They have 80% brand recognition in the United States. That is amazing for any company. And at the time, their market cap was like $1.3 billion,
right,
and they had $850 million in cash. So, I mean, Alibaba is just a smart investor. I think they did the right thing.
We actually do have a soundbite from that interview with Rich Williams in response to would you sell, which it's interesting that Alibaba is taking a big stake in this company but not buying it outright. Take a listen to Rich Williams' quote.
The stock's in a place where we feel it's undervalued. That's why we continue to buy back shares in the company, which we think is a great long-term bet. But you know, our focus as a team just isn't on things like acquisitions or being acquired. Our focus is on building a great business because that's long-term what we'd have to do no matter what. I mean, we see the long-term potential in local and unlocking the value there for shareholders. That's all we're focused on.
It's interesting, Gil, because so many people think of Groupon as this daily deals site that, you know, saw this sort of spectacularly horrible IPO and has been trying to remake itself since. How optimistic are you about Groupon's long-term future?
I'd be cautious. Back to the original point, they're no longer driven by that local business. Most of the revenue is now coming from the goods business, and that's just selling merchandise directly off their website. As we know, it's very hard to make money. Amazon at their scale doesn't make money selling directly, so that's not necessarily a very profitable business to be growing. It made sense for them because they had that brand, because they had people going to the website, but I'm not necessarily sure that in itself is worthwhile. But in terms of the Groupon perspective, Alibaba putting a stake, and even in this big of a stake, means that it's not going to zero. And that's, I think, part of what happened today is there's a realization Groupon's not going to zero because Alibaba took a stake, and there's value just in knowing that, especially if you were thinking of betting against Groupon.
Also interesting to note that Alibaba for so long has been thrown out there as a company that could make huge tech buy Twitter, buy Yahoo, but instead they've been taking smaller stakes and making sort of strategic bets in different industries. And I wonder if that's a pattern we will see